The pound has slipped to a 5-year low against the dollar. I think there's two things which are basically driving that. There's the fact that the UK economy is now looks like it may enter deflation, which means that the Bank of England is most unlikely to put up interest rates. So traders are betting that it will rates won't go up, and therefore the pound will remain weak. It's also the US economy is doing pretty well relative to the UK economy, so they think interest rates in America will be put up, and that would push up American interest rates, and therefore the value of the dollar is it's risen. The dollar has risen against the pound. It's interesting that if you look at the value of the pound against the euro, it's a different story. The pound has been rising against the euro, and that's because the European Central Bank is engaged in much more monetary easing than relative to the UK and the US. So you've got two different things going on. It's down against the dollar, but up against the euro. I think it will essentially carry on the way it has been. I think there is still more weakness for the pound because the US does seem to be gearing up for a rate rise in the coming months, although it may be a bit later than traders think. The European Central Bank is committed to doing much more monetary stimulus, and it doesn't look like the UK is going to have a quick turnaround and get inflation, forcing the Bank of England to put up rates. So I think it will probably continue to weaken against the dollar. It will probably continue to strengthen slightly against the euro. For people going to America, the fact that the pound is weakening against the dollar is bad news because it means it buys less in America and the prices are higher relatively. For people going to the continent, going to Europe, it's good news because the pound buys more. There's another factor that we mustn't just consider people going on holidays, you have to think of the economy as a whole. The value of the pound falling is actually good for British exporters because it means that the prices of their goods and services are more competitive on global markets. So good for holiday makers to some extent, bad for exporters. That makes a difference in the extent that the UK economy imports goods from the rest of the world. So if it's importing from Europe, it's getting people are getting a better deal. If they're importing from the US, they're getting a bad deal, and that will affect the various prices of the goods on the shelves. But in general, there is very weak price growth in the UK because of the global oil price. So the exchange rate has an effect, but it's a sort of second round effect. It doesn't necessarily feed through immediately.